Hi friends, Simon here from InformedTrades.com. Today is January 15, 2016. Time for a look at the charts in the financial markets. Just a weekly review. On the screen right now, you're seeing the weekly chart of the S&P 500. We've talked about this a lot this week. We're at a key level. We are at this trend line, this bottom blue trend line, which if we zoom out, you will see that it goes back all the way to the 2009 lows. This is a trend line that's been very well respected, tested here, almost a test here. It hasn't been broken. We are now back at that line, so a major level. If we break here, that's another sort of nail in the coffin in this bull market. However, if we rally, then let's see if we get back up to 2100, which I think is possible. Let's see if we can break out from there. We are also at a horizontal support level. You can see that here. Let me zoom back in. This red line right here, we had a hammer pattern off this red line in October, another hammer pattern in October 2014, August, and then again in September, late September of 2015. So this level has been respected that we're at. I would expect a little bit of a bounce. Of course, if we close below, then we really, I think at that point, it's a question of how low are we going to fall. However, in light of how strong the support is, and as well as the fact that we've already had a pretty big sell-off, I think it's reasonable to expect some short covering here and a bounce. How much of a bounce we get? Can we bounce all the way up to this trend line here? I think on the bounce, something to watch is that a pattern of lower highs continues, so that maybe we get to here or something, 2070. If we go much above that, then that suggests that maybe this is actually a bull market. But if we can maintain the pattern of lower highs, then I think the bears will continue to have the upper hand. That's the S&P 500. Going on to the Nikkei, same story more or less, or a very similar story. We have the pattern of lower highs in place. We're at a major support level. So this upcoming week, we might see a rally in global equities, just sort of a bounce rally within a downtrend. That's sort of my initial take on it now. Of course, I think it's still a little too early to call this a downtrend, especially with the S&P 500, maybe with some of the other pairs. But the S&P 500, until it clears that trend line, going back to that chart for just a moment, this blue trend line, I think you can make a strong case that the market is wobbly, but we're still going up. Okay, looking at the FTSE, same story or similar story here. The market's really been declining, and now we're sort of we've broken below this support level, but the market's still hovering around this area. We have had a bunch of spikes here, so maybe we're going to find some buyers here. They get a little bit of a relief rally. Fxcm US dollar index. This was interesting because we did break out this week above this resistance level. So to me, that suggests the potential that the dollar rally is still going on. The next leg is geared up. Breaking above this level was critical to, pave the way for more long dollar trends and the view that the dollar is going to have a extended rally into 2016. I now think you can make that case that, the dollar, we've cleared a major resistance level. Now it's time, we've closed above it. Now it's time to gear up for the next big leg up. However, if we look at the futures dollar index, we still haven't cleared 115. So in this particular scenario, and of course based on what individual trades you might have on, I'm a little more wary and a little more interested in the futures dollar index than the Fxcm dollar index. I really want to see 115 get cleared before we put on some long orders. And as we talked about before, if you zoom out to the monthly chart, you can see, if we can clear 115, that could pave the way for a move to 108 and possibly even 120 as potential targets in 2016. But let's see one resistance level at a time. For now, here's the daily chart. We have a couple of trend lines in place that are still intact. So let's see if we can, for me, the big thing to watch is if we can get to 115, if we can clear that. Okay, crude oil. What a week it's been for crude oil. Let's look at the weekly chart. Doesn't really tell us as much in light of how low we are. We've cleared below 33. We are now below 30, actually. So next stop is 26.12. I had gotten long at 33 right around here under the expectation that that this support would hold. It has not. The market just crashed right through it. So we'll see. I probably will add a little more at 26. I think oil is a great buy at these levels. I think it's going to take a little bit of patience, but I don't see how the world can sustain these low oil prices for much longer. Something's going to break, whether it's the dollar or whether it's oil producers cutting back and supply going down. Something, in my opinion, will break that will cause oil prices to rally. However, it may take some patience. If you're of a trading, or if you're looking at this more from a short-term trading perspective or a swing trading perspective, I think 26.12, well, one, let's see if the market stabilizes, but two, 26.12 is the next big support level, in my opinion. And now we're going back to 2003. Wow. So we're about 13 years ago, we're at those prices. So to me, that'll be another potential great level to buy at. Of course, right now the market is still falling strong, so let's see if we consolidate. That may have been something that I should have done last week rather than entering at 33. I just thought I saw a couple good opportunities on the daily charts, a little bit of a spike. Of course, it didn't work out so well yet. Okay, here is the monthly chart of gold. Let's actually zoom into the weekly chart. We do have a little bit of a rally going on here. Looks like a potential base. Looks like we're gearing up. I have a long or a large, for me, relative position in gold. However, I don't think it's time to get too excited yet. We're still in the downward channel here. Really, I want to see us break out above 1200, above this trend line here, before there's any kind of, true enthusiasm. That's a 200 line moving average, that green line. There's a 50 simple moving average, that blue line, or purplish line. You can see we're still below both. So, getting above those lines, breaking out this channel really for me is the big thing. Last but not least, here is Bitcoin, weekly chart of Bitcoin. We've had a little bit of a decline this week. However, we're still at that trend line. Let's actually look at it from a daily chart perspective. We've broken below this trend line, I should say. And we're at a 50% Fibonacci retracement from the swing low in October of 2015 to this recent high in November. So I wouldn't buy now in light of this is just one big down day. Let's see if we get a little bit of range. Let's wait for the decline to stop. It could be an interesting speculative position. I got long up around here, I think. So this position definitely out of the money for me. However, I'm holding on to it. I have a very small position and look at it as, almost like a lottery ticket. My version of the Powerball, where either it's going to be a huge hit or it's going to be when it's used in a lot of other technologies, things like that, or it's not going to go much of anywhere. That's about it for the markets in review this past week. S&P 500, the big thing to watch. Obviously, crude breaking through 30. Let's see if it gets to 26.12. A lot going on, of course. Waiting on the futures dollar index to see if it can clear 115. Any questions you have, anything you want to add, join us at informedtrades.com. If you like this video or enjoyed it, please like it on YouTube, share it on Facebook, Google+. That helps us grow, helps us make more videos. Best of luck in your trading and investing. We'll see you next time. Take care.